In this video, I am going to show you a double live trade on the Australian dollar 5-minute timeframe. As usual, I'm going to go through the thought process that led to the context of both trades. In number 1, we can see a cluster of candles that form an important support level that will be later used in our trade ideas. Notice how the red horizontal line that comes out of this cluster of candles touches and ties the tails of those candles. In number 2, we can see a red arrow pointing up, but that's not what I want you to pay attention to. I want you to notice the way price climbed up the chart. Pay attention how orderly the candles are next to the red arrow. Almost every candle creates a higher high and a higher low in a smaller degree. This orderly behavior can sometimes be interpreted as the fingerprint of market makers, who might intentionally make the market rise to confuse the rest of retail traders in the market. If you want to understand a little more about that, check out the video where I explain one of the techniques that market makers use to manipulate retail traders. Back to our analysis, notice how this movement from arrow number 2 seems to exhaust the energy of price. This can be confirmed by number 3, which shows price in a chaotic and sideways movement. The key to the first trade lies in number 4, which happens to be a fractal candle at the same time it is an outside candle. The first sell trade was opened in the next bar with a stop loss above the highest high of the exhaustion movement that was probably created by market makers. The target for our trade is down to number 1 in the chart, which seems to be a reasonable place to get a decent 1-to-3 risk-reward ratio. In number 5 we can see the rather obvious market maker attempt to scare sellers out of their position. Notice how fast price comes back up. Notice also how price stops rising at the level of the opening of the fractal outside candle where the momentum asymmetry is found. Between 5 and 6, price starts to go down and breaks the low marked by the small horizontal line. This is an indication that we are indeed in the beginning of a downtrend, and sellers are in control of the market. Beyond that, we were able to identify the rather obvious attempts of market makers to scare people out of their sell positions. Here we need to be smart enough to ride with the market makers by detecting the reverse psychology tricks they might pull. Number 7 shows the second sell trade entry, which happens to be another fractal candle with a bearish quality and a relatively large upper tail, which completely agrees with the idea of selling the market again. The stop loss was placed a few pips above the last attempt of market makers to climb the market that happened between number 5 and number 6. The target is exactly the same as trade number 1. The risk-reward ratio in this trade is not optimal but is still decent at a level of 1 to 2.7. Let's see how the trade unfolds by jumping ahead a few minutes. Here you can see the market approaching our target and we are almost ready to cash in about 50 pips of profit in total. The market successfully hits the target in a double sell trade that took advantage of the downward flow of the market and the identification of market maker maneuvers as well. I hope you have learned something new with this video, and hopefully it sparkled your desire to trade like a professional Forex trader. If you want to understand some of the techniques that were used to make these trades you saw in the video, check out our strategy store or send us an email. If you enjoyed the video and wish to see more, don't forget to subscribe to our channel, like the video, and leave your comment below. Thank you for watching and I hope to see you in the next one.